Good afternoon, welcome ladies and gentlemen. I will have sparkling water and I will be the only one, so to prevent yourself from shaking your bottles and sprinkling other people. That's going to be an Oxford debate, but seriously, I'm joking, because now we're entering into the realm that is a bit, we take it in some clauses, and that's going to be an intellectual exercise. We will talk about a very important topic. We have a thesis: the index-based management will be a dominant investment method in 5 years. The index-based investment will be the dominating investment method in 5 years. This is a thesis that you can agree with or not, and in a minute on the stage we will see some people who might agree or disagree with this thesis, and the point is not, as during the previous panels, to get closer to the truth and to show all nuances and look for the real message. Here it's about supporting or contesting a thesis. So we divided members of this debate as proponents and opponents. The task of proponents is to convince all of you that this thesis, so the index-based in management, will be the dominating investment method in 5 years. So the people who will be our proponents, they can totally, they can disbelieve this thesis, but their task was to present and to prepare some arguments for, and the task of the opponents was to prepare the arguments to dismiss this thesis. So that this work, this effort put in coming up with all these arguments, this is the very value of this exercise. It's a very important topic, and that's a bit of a joke, as I said, because this is the discussion in which all of participants will put some mask in order to show you the arguments for and against, and to see you how you react to these arguments. So, as I said, the sparkling water is in my possession because we are not about to fight. So Robert Zapotoczny, Marcin Wlazło, PKOSA, brokerage house, Grzegorz Zawada, please, a round of applause, because they will decide on the winner. So the louder the applause, proponents or opponents, everything will depend on you, and you will show us who wins. And in opposition, Robert Sochacki from Beta Securities Poland SA. Małgorzata Popielewska, member of the board of Q Securities SA. Jarosław Dominiak, president of the management board of the Individual Investors Association. And Jędrzej Janiak, the investment funds analyst, the broker of securities from F-Trust. And that was the last moment when they offered themselves a shake hand. So once again, and now a few words about the rules. The assumption is, and let me remind our panelists of that, let me explain that according to the assumption, every participant has 5 minutes for their speech. You can count that it will be 40 minutes and we're off. No, it will take a bit longer, because we make one assumption, which is the assumptions of every Oxford debate of intervening. You can stop the opponent or proponent and ask a question or to comment. After last year experience, when we could see a lot of interventions, and at 4 a.m. we have the 76th intervention. No, it was not like that, but that was something that was plausible. You could make 8 stops, so you can break the speech only twice for every opponent and proponent, and you will decide whether there will be one person interrupting or more people interrupting. So they are all sitting here, and this order is not a mistake. So they will present the thesis and then we'll support it with arguments. So 5 minutes for everyone. As you intervene, we will stop, and that's a request to all of you. Let's keep these interventions under control, because we need to be on time for the dinner. I'm sorry to talk about food all the time. It won't be at 10 p.m., I promise.
No dobrze, proszę Państwa.
Right then.
Debata Oksfordzka.
Oxford style debate. Index management is going to be the dominant investment style in 5 years' time. Let's start. Are you ready? Robert Zapotoczny, PFR portal head. The floor is yours. Dear Marshal, dear representatives of the opposition, it is our honor to present our thesis today that in 5 years' time, more than half of all asset management will be passive. We particularly respect our adversaries. We are full of respect for your skills, discussion skills, particularly since we know that you are right. Let me start by saying that passive management is already more than 50% of asset management overseas as of today already. For example, in the US, almost 60% of investment takes place into index funds. So, are we going to be reached by one of these major changes? Worldwide, we have $15 trillion are being managed in passive funds. In Poland, the number is slightly lower. It's 12 billion zlotys. A lot lies ahead of us, though. There's huge potential. In the 90s, 1% of assets was managed passively. Now it's almost 50%. The goal of this kind of management is to follow the benchmark, the model portfolio. The key being, regardless whether the benchmark is going up or down, the key is to reflect that benchmark and, as a result, emulate the benchmark at each stage of the investment cycle. In terms of the active management style, the goal of the manager is definitely taking over the benchmark, but looking at Vanguard results. The first passive managing institution in the 70s, studies have shown that a definite majority of managed funds did not reach the planned index. What are the benefits of index funds? They are cheaper. In the longer time frame, they reach better results because they don't have to involve so many analysts, managers. So in the long term, for the saver, for the investor, they are more attractive. They don't charge a success fee. They are clear, easy to understand, they're transparent. The presentation of the portfolio is clear, so you know what you invest in, and they are predictable. The investor gets what is stated in the description. In terms of what They are mainly geared towards ETFs, index funds, that is. In Poland, we don't see them represented in such a big number, and such a big share as overseas, yet we expect that to happen quite soon. Dear Marshall, dear Speaker, let me hand over to a colleague. Thank you very much. It's now time for a response of the other party, Robert Sochacki. Time stop. Reset the timer, please. Back to 5 minutes. Robert Sochacki will respond to this thesis. Index management will be the dominant style in 5 years. Hello, ladies and gentlemen. Those who know what I do may wonder what I'm doing on this side of the table, and they will know that I would be more than happy that if the thesis put forward today were true. Unfortunately, it's extremely there's extremely low probability that this will indeed happen. First of all, the reference market. There are already markets where, for some asset classes, index funds are dominant. In the US, in Israel, more than 50% assets are passive management ones in terms of equity. But if you look at bonds and other classes, if you take them into account, we are below 50%. In Europe, the indicator stands at 20%. In Poland, we're much closer to Europe than the US. So if this style is extremely successful, then it'll be closer to 20% than to 50%. Secondly, distribution. In Poland, funds are rather sold than bought, so to say. Distributors and banks, as for-profit institutions, will do their best to maximize their results or returns on their distribution, and asset managers pay 60–70% of the management fee for that. For an equity, the fund is between 1.2–1.4%. For comparison, PZU takes 0.5% for management. So how do you distribute funds that charge 3 times less than the distributor charges for the fund's distribution? It's easy to answer this question. Thirdly, the end market. Candidates for buying traditional investment funds are around 20 million in Poland. They are owners of savings accounts, bank accounts, in different age groups. Whether they will buy passive funds, we know from point 1. To buy an ETF, you need a brokerage account, which count 1.5 million in Poland, out of which 300,000 are active, that is, at least one transaction per year. The owners of those 300,000 accounts are around 200,000 people. If we combine these 200,000 with 20 million, you see the huge gap between the two asset classes. So really, the number of brokerage accounts would have to grow significantly, and somebody to promote these kinds of funds. Fourth, finally, regulation. If we assumed that it's worth developing the capital market in Poland because it's an important element of the financial market and that is an important part of the economy, then we would have to wonder about incentives, encouragements that would support this capital market. In countries like the US and Israel, where financial markets are extremely successful, are not places where people are more successful, have more money. No, in the US, ETFs are tax attractive. In Israel, on the other hand, intervention. Stop. May I continue my last sentence? Just a second, please. In Israel, in turn, legal regulation forced impartiality and independence of distributors, and these are reasons why passive management is dominant in those countries. So if you want us to lose today's debate, then we would have to wonder what kind of incentive would increase interest on the part of investors in the capital market and its development, and particularly passive investment.
Interwencję przyjmujemy. Czas, stop.
Intervention time stop, please. I would like to propose to use the 1 minute 20 seconds for Robert Sochacki to use for a counter argument, so that we can present a counter argument for the thesis.
Tego czasu nie oddajemy, ale to...
No, we cannot give up that time, but let's respond to that intervention and let me note that. It never crossed my mind that passive funds are worse than active management, but the thesis is a bold one, although I know that passive management is going to be very important in the next 5 or 15 years. I don't think it will be dominant. Dominance, defined like my fourth speaker defined it, that is over 50% in our financial system in Poland, is impossible.
Koniec czasu. Bardzo serdecznie.
The time is up. Thank you very much. That was round one. One intervention used. Marcin Laszlo, head of brokerage house at PKO SA. Dear speaker, dear opponents, dear colleagues, ladies and gentlemen. We tend to ask ourselves questions. It's been true for thousands of years. Who am I? Where am I headed? And this made us invent the wheel, among others, and we've analyzed the world around us. What is the world like today? Let me repeat what my fourth speaker said, my opponent, my colleague representing my group. Indeed, we are already where we want to be in 5 years' time. Most assets are invested in, that is $15 million, are invested in passive funds, so we are headed in that direction too. The inflow into passive funds has increased, and the dynamism of that inflow has been growing. That's not because every class has been a winning one in the market, but all this shows that the world is changing. Our vision of the world is changing, and the tools we have available are changing. Tools that we have available for managing our wealth and our investments. What is now the most dynamic tool, most dynamically developing? And I am talking about algorithm-based management, automatic advisory, artificial intelligence, quantitative analysis. All these methods require, as the produce they are based on, a transparent, predictable product with no significant bias from the given asset class, the given index. These are methods that only use index funds, and only these products will provide what's necessary for being fed into the mechanism. They're reliable, trustworthy.
Widziana to nie jest tak naturalne, ale one wiernie odzorowują.
I'm talking about good index-managed funds, ones that allow us to reach the smallest contributor of the index, the smallest ingredient, without personal meddling with the entire product, with the entire portfolio. Anyone can do that, even in the actively managed funds. But why do that? We pay money for that being done by specialists in, even in funds where there's composed of small entities. We are lazy by nature. We don't want to do something that somebody else can do for us.
The world has changed. Jesteśmy gotowi płacić za dobrą usługę.
The world has changed. We are ready to pay for a good service, a service that increases our life quality. And ETFs are this kind of product. They make life easier. They take away our work, our labor, a labor that can be done by robots, by somebody else. And this is a product for anybody, for the individual client. It's liquid, it's transparent, it's easy, it's cheap. For institutional, for the same reasons. And for funds, for the exact same reasons.
Czyste mięso bez ulepszaczy. A co dają ulepszacze w funduszach aktywnych?
So that's meat only with no enhancers. And what are the enhancers in actively managed funds? Well, that's the hope for a golden success fee, the entire history of the Polish capital market, a promise of return rates beyond the index.
Oni, czy absolutnie, dają tylko czasami jakąkolwiek pozytywną stopę zwrotu.
And sometimes, these funds don't even give a positive return. Young ones don't want to look to those expensive actively managed funds. 84% people already see ETFs as there's their retirement investment product. Ladies and gentlemen, we're not claiming that ETFs are going to be the only legal investment vehicle. No, but what we claim is that passive, transparent, cheap, and
Dziękuję bardzo.
a real revolution is taking place, and nobody can stop it. Thank you very much. Your time is up.
Ja czuję się uruchomiony, muszę powiedzieć.
Wow, that was impressive.
Szybko do żony zadzwonić. No dobrze, proszę Państwa.
Now, ladies and gentlemen, very well then. Now, the opponents.
Członek zarządu Securities SA.
Małgosia Milewska,
Bardzo dziękuję za zaproszenie do tego panelu.
Małgorzata Popielewska, member of the board at Q Securities SA. Thank you very much.
Po prostu aż się prosi.
Listening to your discussion, I must tell you that you are committing the cardinal sin.
Popełnił ten rynek funduszy od lat i cały czas się nie może wykaraskać. Cały dzień dzisiaj rozmawiamy o tym, dlaczego jest tak,
We've been talking an entire day about why ChatGPT is growing, why we're growing in wealth, and why the share of investment funds in investment is not growing enough. It's not keeping up with that pace of growth. Listening to you, I'm starting to understand why that is. Because you're talking about a product while we are talking about client centrism. And it's something we need to go for. To sell whatever, we can't be focused on the product, because the product can be good or bad, but it's sellable when it's adapted to the client's needs. Now, asking about passive or active funds or index investment, what are these products, ETFs, will be dominant in the next 5 years? We have to distinguish between the product and its popularity. You have been trying to present it as the features, the upsides of the product, and we agree with these benefits of this product. I don't think we have anything against that. We are fans of these products, quite like my colleague who is a member of that market. I must admit that in the 90s I created the first Polish index fund, Unicorona, which unfortunately
zainteresowania dystrybutorów nie został sprzedany i przyszło.
we did not find the interest of distributors and was soon closed down. So, I'm a fan of this product, I understand its benefits. Not only my own self, but my team understand its benefits. My question is, how are they supposed to reach the customer for them to become dominant? What does this lead us to? Where this leads us to the clients, the customer, the individual investor. If we're talking about funds, or the product, I mean the index-based funds. If we're talking about these, you understand that 90% of distribution of investment funds goes through banks. You understand that.
A jeżeli chodzi o takie
And
instrumenty jak ETF,
If we're talking about ETFs,
są czy nie są, już była poprzednia dyskusja, jak mają wyglądać, w jakiej funduszowej formie mają wyglądać ETF.
whatever form they take, they're accessible by 200, 300,000 people that possess active brokerage accounts. Let's say 200,000 among them are active investors. So that's one hand. On the other hand, we have the institutional client. I agree fully that it's a great idea for institutional investors. ETFs are great for them to manage their portfolios because they allow for exposure, construction to exotic markets, etc. It's a simple tool, easy, uncomplicated intervention. Stop. Do you agree? No, I don't. In a minute. But for a fund, for a TFI to buy an ETF, it has to possess assets, money. And where does this money come from? From the retail investor. And this leads us back to square one, to the distribution organization in Poland. And it is as it is. That is 90% is sold through banks. And at the previous panel, we heard about it. That is, products are sold, not bought. Sold by the capital group the bank belongs to. Intervention. Again. There we go. No, what do you mean? Why is one of you raising the intervention, the other one taking the mic? No, that's not how it works. Okay, go on.
Bo powiedziała pani, że przyjmuje
Tak, tak.
pierwszą.
Dobrze,
You,
panie marszałku.
you said that you agreed. Right, dear speaker, ladies and gentlemen, I can't stand what I'm hearing. I'm losing my last hairs listening to you. I have a question, not only a comment. If I understand you correctly, if the product is bad, that's something I can understand. But if the product is good, but the way of it being sold is bad, then we have an issue. Do you understand correctly what you're saying? Right, thank you very much for that question. Indeed, it shows you that you didn't understand me. The product is very good. ETFs is something I like very much. And I said I worked with them in the 90s. I'm very happy with ETFs. It's a difficult product because remember that in the sales, in marketing and selling a product, not only the product is important, you need to adapt the product to the customer's needs in such a way that the sale takes place. Another question? Another question, right? The last one. The second intervention in this session. Right. Third question, second in this session. May I? Well, you said that the product is sold, not bought, and the client should play the main role. So do our opponents assume that the world does not change, the client does not change, and we can continue selling our customers the BS that we've been selling for them to them for the last 10 years? Is it not the fact that the customer is ever better informed, ever more knowledgeable, and can pick and choose what they want to invest in? Thank you very much. That's it. You're very helpful. Yes, indeed. The level of awareness is growing. The customer is ever more knowledgeable, ever better informed. But you do realize that most assets in Poles are invested in deposits still. 8% of investors, the savers, are those that invest actively and have some idea of how to actively invest through exchanges, etc., including through ETFs. Indeed, I'm always a proponent of education, but apparently, and we've talked about it today, it's not only about education, experience. Behavioral features of the client, the customer, are very important. Let me use my time since I've been asked the question. Behavioral features of the customer, the Polish retail customer, are important, not only of the Polish customer, but let's focus on Poland, are such that the customer likes going online and checking things, doing the research online, but when it comes to the investment decision, the transaction, they want to do it with a human being on the other side of the table. That's number one. Secondly, picking up on the blog by Samcik.
Po drugie, może pan liczyć już z czasu.
Dobrze, to startujemy z powrotem z czasem 40 sekund.
Okay, 40 seconds left. The next feature is that the Polish investor is willing to invest in equity funds, but they need more information. The Polish investor has no confidence what happened on capital markets recently, does not create favorable conditions for the Polish investor to enter. We know what's going on at the bank with regard to what happened, what was mentioned during the last panel. So products owned by the capital groups are being distributed, and the emphasis is on them end. May I respond? No. Within intervention, we have some problem with microphone. Good. It will be possible for you to use intervention. Michał Duniec, Analizy online. Welcome, dear speaker, dear members of the opposition. My task is to provide you with counter argument to what was said, so I will refer to what was said by Robert and Małgosia. That's going to be a series. Robert, you said that regulations are problematic and they hamper growth of index-based investment markets, only to some extent, because many foreign countries, they have their ETFs, different distribution channels are used, so the role of a passive investment, which is recognized by brokerage houses, it's growing about 3 billion PLN. Of course, with regard to the retail part, which is 180 billion, it's not much, but with regard to what was said by Robert Zapotoczny, 5.5 million indirect passive investment. Of course, we're talking about billions. We have also funds that you represent, and we have also other forms of passive investment, like robo-advisors. All in all, the share is significant. So regulation is not any problem, and this revolution is accelerating. We meet in 2023, and we take the perspective by 2028. I fully believe that the regulations will become better. Stop. Intervention accepted. Not to interrupt the next thought, the ETFs acquired by investment funds is 6 billion, not 5.5, so it's better than good and better than that it seems. But as a comment to what you said before, 4% of people in Poland knows ETF. And the majority of them are sitting here in the room, so for sure we're heading in a good direction. I would like this process to accelerate, but it's a long way, and 5 years, there is little probability. Of course, I would like to get to this moment in my life where when that becomes a matter of fact. We have only one room. You can respond. I'm supported by my colleagues, but the majority of investment is realized by ETFs. So the behaviors of our investors were migrated from this aggressive form to foreign ETFs. So it's not about weakness of the Polish market that determines this situation, but a good offer and good return on investment on foreign market. Our market didn't support development, so I think I should stop. Okay, and let's restart the clock. Here I'd like to go back to the primary sin. There are some philosophical elements in this debate. I imagine this like that. So first we acquire assets and then we satisfy clients. I think that firstly we should show something ourselves as the sector, and then encourage our investors. Intervention. I agree for intervention, but I will just finish my thought. So the index-based funds are a helpful hand because they always do the same. No matter of the atmosphere, of the temperature, of the weather, of the match result, they do exactly the same. So the predictability could be treated as a kind of remedy to alleviate the problems defined by Robert. Intervention number 2 from the opposition, Małgorzata. With regard to the question, what was first, a hen or an egg? I'm talking about sales and matching the needs of the customer. Ladies and gentlemen, I will not quote the author unless I will be supported by my colleagues. The publication on the development of passive investment products in Poland, intervention. It's not the time for intervening. So let me intervene. Please allow Małgorzata to finish. And indication on the problem identified by the author. So this author is Treasury. And once again about philosophy, what was the first, the product or the client? Of course, I will not go deeper in that. This is a philosophical question, but we need to, and that should be initiated. But you cannot just offer a product because the product itself will never lead you anywhere. The product. Remember, not only about the product, because we're not. Where is the question? What is the better? But yeah. Exactly, but we are considering whether it will be dominant. The product itself will never be dominant without the client. Please respond to the comment according to the author that you quote. In one of the subsections, they have defined that one possibility to develop such investment is to take responsibility by the companies who already have such assets, so they would need to devote a part of their profit. But the thesis that directly with regard to your question, the problem that is being set up from scratch, it will experience all problems that we described. So please, we restart. So when it comes to definition of this index-based fund, because a lot of definitions have been mentioned, so more or less there are two legs. We have index-based funds with represented today, and ETF, which are index-based, and this definition shows that this is a core product, a core instrument. So this is key. The company can offer active management based on passive funds. So advisory is it's a kind of suggestion how to allocate money, but the dominant thing is passive investment, passive funds. And here we can see some possibilities for the market to expand through products which are index-based, which are packed in some other form of advisory model, advisory that can be treated and recognized by customers like as attractive. And with regard to what was said by the opposition, if we take a look from the perspective of the market capacity, 20 million customers for investment funds and PPK, and we will set it against 300,000 of accounts of potential customers, active funds will always win, but the passive funds are being talked about by everyone, not only here in Poland. Of course, it's not translated into their value, but this is an intense trend. So with the force of inertia, it will gain ground, because we've been waiting for regulatory changes a long time, for many years, and I assume that over the next 5 years the major flows will go to passive funds versus active funds. Thank you. And now moving towards the third representative of the opposition from the Association of Private Investors, Jarosław Dominiak. Dear speaker, dear opposition, I think I don't need to reach so far to Tolkien and All Saints in order to defend the thesis, but let me tell you that I was quite mitigated, because I was assigned this role and I should sit on the other side, but it appeared that I didn't read carefully the thesis. And I didn't take into account this aspect of 5 years. We have PPK, and we tell that regards the same group of people with the same money. We know how tough is that, and we all support this program. We have XVII, where we try to encourage the Polish people with some incentives, and we know how difficult it is that. And we have ETFs, and I'm a fan of this solution. But in order to present it in a very explicit manner, so the arguments that you refer to, this is one thing, but we need to take into account and take a look at the starting point and at places where we should concentrate assets. And this is the point, is that we have a lot of people looking in the same direction, but we need to push over these 5 years a lot of assets and a lot of people. And this tunnel that we have, this pipe, and its capacity is limited, and as I've been listening since today's morning, the lawyers, the infrastructure managers, they all repeat that the life is hard for ETFs in Poland. As we all gather here, we know that we have the first intervention. Can I finish my thought? That the first foreign ETF, in order to be able to register here in Poland, it took them 4 years. The first, an hour ago, I thought they needed 4 years. They needed 10 years. They needed 10 years of work, and over the next 5 years, spectacular number of 8 new funds was created. Thank you. So let me use another quote. Anna Maria Jopek, a Polish singer. Please stop the world, I'm off. So don't stop this world. This world is changing and we will follow. Jarek, you mentioned the semantics and 5 years, that the dominant manner of investment is asset management fund managed actively. with the majority of flows in index-based fund. Is this the dominant active or passive manner of investment? Is a fund which has 100% of ETF but is actively allocated, is it active or passive? The dominant investment method, it will be a class of assets by... So there should be a question mark, but it disappeared. But you can refer to this. I think it's about definitions. The maximum... We will be very friendly about our adjustments. There are no such betting system, but I would bet that we won't do it over 5 years because such solid things, you need a lot. We have a lot of great ideas, but unfortunately they didn't, they were not implemented. The group that I represent of individual investors avoiding high fees, they tend to say that they want to make this effort to make it cheaper. Okay, we have a concept for intervention.
Nie uruchomiliśmy jeszcze czasu, bo nie było odpowiedzi.
The last intervention to the speaker. Dear speaker, I understand because intervention, no matter what's the number of interventions, we're getting stronger. Apart from ETFs, do you see such barriers preventing and hampering these funds from the regulatory perspective? And the second thing, what is the diameter of this pipe through which you would like to push the index-based funds to the market? We need to agree on some metrics. 20 million customers gathered, assets. We're talking about 5-year perspective, so we can make some assumptions. And Małgorzata tried to convince us that in the history of funds, taking into account the dynamics, over 20%. Okay. So, take into account the dynamics, and I'm referring to realia, not to... Okay, we go back to our time, 2 minutes left. Okay, so the issue of the litmus paper here is that members of the association the best offer for robo-advisor. This discount limiting by 50% is not in the top 10 discounts used. So you might say that it's not a representative sample of 10,000 people, but I will dare to say that there are a lot of factors overlapping: the knowledge about ETFs, 4%, and some derivatives that cause that this momentum, that we're losing momentum, and some things should happen to arrive to have 15% of people recognizing ETFs from 4%. To make it happen, the distribution problems that you defined I respect it because you're right, I could learn from you. And at the end, the very valuation by polls. We are mobile, we are looking for special offers, and we assess ourselves, evaluate ourselves as people with insufficient economic knowledge, which is translated into such results of ETFs and or in PPK. So I assume the analogy that it will happen, or you need to multiply it by 4 or to add a 0 at the end. Thank you.
Ostatni już mówca.
Dear opposition, Grzegorz Zawada, director of the brokerage house at PKO BP, and you have only 2 chances to make a break, so you lost your possibility to intervene. Dear speaker, dear opposition, when I was appointed to this debate by Małgorzata, this was the first point of stress. To be number 4, it's very difficult because you need to defend your goal, let's put it like this. But the opposition agreed that ETS is better than actively managed funds or passively managed funds. So what is dominant? This is the point that we're discussing. Whether this is just a matter of deciding whether it's feasible in 5 years or not. I will not repeat the arguments that were already put forward, but I will try to talk about this time frame. YouGov has presented its data based on 14 member states of the European Union in the context of their interest in ETF, and I found 2 interesting things. The first one, guess what are the growth predictions for the number of new customers buying ETF over 12 times? 32%. 32%. These are going to be new investors in ETF, assuming that this prediction is true. So, okay, but and the second issue? A second thing that was surprising, the buyers, ETF buyers, are people 35 plus, and over the next 12 months, it's results from the same research, people 18 to 38 will represent 54%. So it's not only the dynamics that is accelerating, but the customer structure will change a lot because new people are entering on the market because they buy it via online platforms, not via advisors. And now time to intervene. Very interesting research, but what is the meaning thereof? What does it mean 32% of growth from anything, from nothing? The number of people holding ETFs is very low. So the exponential growth is visible. Of course, we have analyzed it. Robert delivered some lectures on that, and I was a careful listener. Of course, the growth and dynamic is impressive, but it is so because the base is very low. And this is one thing. And the second thing is that's the matter of age. So the younger the people with higher propensity to choose some new solutions and choosing new channels. Maybe I'm a dinosaur, but money is a domain of older people. So for sure they will be interested, they will pay in, but they will maybe some money saved during their studies and nothing more. So thank you very much. I represent a bank whose chairman said that our customers are leaving for so-called natural reasons. So I'm sorry that to use this example. We are taking a look at older investors who've been behaving in a given manner, and we assume that for the next 5 years they will continue to behave the same. We need to take into consideration that the world is changing, and that's one emanation of this change. When it comes to these percentage figures, they do not regard Poland. These were other 14 member states of the European Union, but to concentrate on nominal values. So in this research, it appeared that the highest number of investors in ETF is in Germany, and in Germany the predictions with growth predictions by 2025, so in the horizon of our discussion, the number of investors in ETF, it will be plus 9 million of new investors. So we have this nominal value here. And stop and the second chance. I'd like to refer to the age of investor and this leap from one scope to one range to another, and to refer to research carried out by private investors association. So this average age is change in the average age is very dynamic. So I would like to give you some arguments. So what will be the source of this change over this short period of 12 months? Because when we take a look at the population and at a large group of people, this dynamic is quite surprising.
Well, I'm not the one that carried out this that study, so I'm just quoting. And I mentioned the 55%. That's a forecast for 2025. That was not in a month, 12 months. No, it was a 3-year perspective. To answer your question directly, and it's not about Poland; it's about Western European countries. Again, time start. Right, so we've quoted some studies. Let's now pick up a few more arguments. The first one, costs. Definitely, ETFs are cheaper. The compound interest works. But think about this. What does the average client ask first when they come to the brokerage house? Why the fee? Why such fee? Well, above all, the cost of investment is a key parameter assessed by the customer, by the investor. So a cheaper investment is a better investment. Secondly, quality of management and investment returns. There's been a lot of talk about this, and I'm very saddened by differentiating between the product and the distribution, because I think that quality of the investment result equals quality of product, because you will never buy shoes that are too small, however well they are sold to us, being sold to us. I hope you will invite me here next year, even though I will say the following. I read on the Financial Times that in the case of actively managed funds, the investor should usually pick the last quartile funds, because those that are on the bottom have the highest probability of being on the top in the next period. I think it might not be a precise fact, but there is something to this. And finally, I have 40 seconds to go. Regulation and its impact on whether ETFs will be more or less popular. They will. Why? Because if there's no incentive, then from the point of view of the distributor, it'll change nothing whether it's a passive or active fund, because they're going to have only one fee, whether it's a distribution fee or an asset fee or whatever it's called. In any case, at the end of the day, it will be unimportant whether they have the incentive or not. I would like to protest against products of own TFI being strongly sold and actively sold by force by the TFI's back. I don't like that. Near opponents, then last turn. You can interrupt twice. The last 5 minutes. That may drag on a little bit.
Chciałbym tylko powiem jedną rzecz, że liczę czas zadawanych pytań, zazwyczaj interwencji starać się mniej więcej...
Jędrzej Janiak, analyst of investment funds at Makler and broker of equity at eTrust. Dear speaker, participants, this has been a very valuable debate, which is a rare opportunity in our country. This is the last turn to go, and you will have to pick sides. Pick the side that's closer to your heart, whether passive management will dominate the Polish investment scene in the next 5 years. Let me start with the arguments of our opponents: low costs, cost efficiency of the products. Statistically speaking, efficiency compared to active funds and growing popularity, well, there's no discussion about that. Still, we have to compare against the realities of the Polish investment market, which you know all too well because you deal with them on a daily basis in your everyday work. You have to deal with cost efficiencies, the economies of scale, and requirements both on the part of the clients, of the customers, and your shareholders and bosses. I have 3 questions for you, and I will ask you, ladies and gentlemen, to answer these questions to yourself. How do you see them? First, we summarized by saying that for a transaction to take place, you need a seller and a buyer. Whether the initiative is on the part of the customer or the seller, depending on whether it's an active or a passive fund. We said how many customers having brokerage accounts ready to pay their taxes, deal with their tax declaration on their own. It can deal with psychology of investment and with the markets. Please answer the question. Do you really see in Poland, taking into account the psychology of Poles, the mentality of Poles, do you really see enough customers with enough assets for this revolution to really take place? Second, costs. We need to remember that costs are the revenue of others. You need revenues to cover your costs and generate profits. There's nothing bad about earning. But remember that the service of asset management or advisory services or distribution services are rather regulated with by the regulator, all kinds of licenses, etc. So please ask yourselves the following question. You go to your shareholder or your boss and say, we want to start a new business line based on index-based instruments. And you convince your boss that in 5 years you will reach profitability, break-even threshold. It used to be 100 million zlotys when I was starting. Currently, it starts at 1 billion if you go to your board, and that's not really enough. So the profitability thresholds are so high that the question is, can you convince your bosses that this kind of business line is worth starting? Time stop. You mentioned costs and revenue, and I wanted to ask you by the alternative costs. Well, of course, that's not really measurable because alternative possibilities of investment are, an open. It's an open list. My understanding is that that you seem to be suggesting that we assume that active assets. That was a mistake. Sorry, I meant that you seem to be assuming that passive funds always earn. They're always in the green, but that's not the case. You need to pick the right moment to invest. Last question I wanted to ask you. If, as a Pole's favorite word, if. So if we assumed that we changed the tax law and included incentives for long-term investment, if we created room for new entities supporting this kind of investment, if we changed regulation and regularity requirements, and if this was consulted with the market representatives of the participants of the market, and if it all happened at one time. Then, knowing the realities of Poland, my last question for you, ladies and gentlemen, is, do you really see all these changes that I mentioned possible and possibly successful in the next 5 years at one time? Stop, intervention, may I? Go ahead. The quote is going to go last this time.
Takie stwierdzenie, po pierwsze,
You said that above all cost and revenue, but I'd like to go back to what Małgorzata mentioned, that is client-centrism, client in the main role. Remember that the customer also looks at those costs. If we're talking about distribution and revenues, profitability, with all due respect to independent investors, the main player in this market are banks. Why should we be selling anything if we're only looking at the revenue side? We need to take care of the customer as banks because the awareness of the client is growing. When we first met with Małgorzata Rosewicz, it was said that it's not about truth, it's about winning. Thank you. The question was about 1 minute long, so we have 2 minutes to go. So many comments were included that I don't remember the question. Oh, there was no question, it was a commentary. Oh, right. Right, banks are also looking for profit. So, and if they see that big institutions bring about this revolution we're talking about here, that big revolution is only possible through big institutions that can afford this. Like a very well-known author suggested in their article. The question is whether and at what level of assets this kind of investment decision can be made. Back to time. Back to my 3 questions. Now, ladies and gentlemen, if you answer any of these questions, no, not necessarily, that's hard to do, then please give me a strong round of applause.
Jedno co tego nie wyklucza, jak najmocniej klaskać po stronie opozycji.
For the opposition. Thank you. Thank you, ladies and gentlemen. We've reached the conclusion of this Oxford debate. Now we're going to vote by applause. Right, the time is up. Inaudible, a dialogue inaudible. Now, ladies and gentlemen, it is time for the verdict. Who believes that the proposing party won? I'm half hard of hearing now, so now who believes that the opposing party wins? Now, I'm completely deaf now. Let me tell you this. I hosted a Mensen Petro debate yesterday, so I'm happy that I hosted a debate among people who know what they're talking about today. Thank you very much for your participation, and I wish you a very good evening. A lot of conversations and even more fun. Thank you.